Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, March 7th, 2018. In this video, I wanted to go over some trade ideas. I'll cover both some of the official trade ideas on the site as well as some of the unofficial trade ideas that I've shared recently and a handful of new trade ideas. I'll try to get through it quick, probably talking maybe a little over a dozen stocks here, so I'll breeze through each one and as always, if you have any questions on these, you want clarification, you want certain levels that I didn't cover, or targets, just drop me a line in the trading room and I'll be glad to provide that. All right, just before we get into the trade ideas, a quick overview on the market and just, I want to really make awareness to current market conditions. I know some of you follow the markets probably as close or maybe even closer than I do. Others probably work full-time jobs, part-time jobs. Maybe you're a longer-term trader, so you don't focus on the near-term charts. But the story has been this. This is where swing traders make their money on these big rips and dips. We had very profitable shorts heading into this drop here. We were able to reverse close almost the majority of those out. I think all but one down here, into or around the lows, and then had quite a bit of longs. And personally, I made mention when this is the SPY, the targets for the SPY official long trade. We hit T1 right away. T2 shortly thereafter. I posted taking profits there on my booking all profits on my index longs because for this reason I expected a pullback and this is the market digesting these big moves. This has been a chop fest. This is what I'm trying to point out, and keep this in mind with your swing trading. That when you have this volatility, they have finally, after over a couple years really, of what we call the short vol trade, VOL, meaning short volatility. That's where the institutions were shorting volatility, the VIX index via various measures. Volatility was extremely low. Um, and so you didn't see this years ago. You saw more of this slow and steady up, maybe a little bit of sideways, but even during those sideways, even during this consolidation period, look how tight that range was. Now, this is what we're looking at. And this is the new norm, and it's not anything unusual. You go back years in the market, and this is what happens, particularly after extended low periods of volatility when there's finally been a boom, a big move. So I just wanted to factor that in. At some point, this will normalize and volatility will probably temper down a bit. And there's always going to be those periods of expansion and volatility. And again, that's where swing traders we look to make a lot of our profits in short order. Um, Now, so the takeaway from this, again, on a lot of your positions that you have that are closely correlated to the broad markets. In other words, if you own Apple, Apple's a top component of both the S&P 500 and the Nasdaq 100. Therefore, it will move largely in concert with the broad markets. And as such, you need to expect that. And therefore, if you're trailing a very tight stop on a position like this, say a 1-2% stop, you might as well just close the position out because you're going to get taken out in this noise. And what I'm referring to, if you're shooting for new highs, let's say an Apple or a SPY, you believe as I do that we're going to go on hit this third target and then most likely take that out and probably make new highs in the market before we go much lower, drop below these recent lows. If that's the case and you're running a 1-2% stop on a position that you're trying to make, 5-10% on more, 10% or more, you're probably, if you haven't already, you'll probably get taken out in this increased volatility because that's the new norm. You know, Rips and dips of 1% or more in the broad market, and of course in individual stocks that correlates to rips and dips of 2, 3, 4% or more. All right, so enough on that. Just be aware of current market conditions and factor that into your trading. Um, if swing trading as well, I put a lot of multiple price targets. When you have this type of period if you're not comfortable with the day-to-day back and forth, but you do like some of the trade ideas. Shoot for the shallow profit targets. Get in, get out, hit and run, and then deploy that capital back into another trade. So that's it. That's current market conditions. So far, so good as far as the market is. We haven't taken out the previous highs yet, but we still haven't taken out the previous lows. In fact, we're about smack in the middle. And if anything changes in my view, I'll let you know. I told you before, I'm not so crazy about some of uh, the indicators and where prices are stalling out. But again, let's save the broad market analysis for another video. I've done plenty of that lately. Let's just cover trade ideas, which also segues into the point I'm trying to make is right now trade the stocks. That's what I'm doing. I'm trading not just individual stocks, but I'm focusing on alternative asset classes, commodities. Commodities have been trending. We've done very well in our commodity trades, and with very little angst or headaches, or we don't see the givebacks and the oh gosh, we're way up today, down tomorrow. You look at things like JJG, which we recently closed out. We were long not far off the lows. That's just a 60-minute chart. Here's the daily trend. This is where we bought it down here. This is what I'm looking for now. This is what I'm trying to get to. So, you don't have to trade stocks as a trader. We're trading commodities. We're trading bonds right now for the first time in ages. I have treasury bonds as both official and unofficial trade ideas. In treasury bonds, are a completely different asset class than stocks as are commodities. So that's where the opportunities are. I think that's where the opportunities will continue to lie in 2018. I've already done an extensive video on commodities recently, and I've covered those. I always keep an eye on commodities, and I'll continue to do so going forward. All right, dive into the trade ideas in no particular order. I did have, let's start with stocks. I had a couple questions this morning in the trading room I noticed on the semiconductors. The story on that, if you're new to the site, this is an official trade. In fact, I believe it's our only official short trade idea right now. But the story was this. We shorted stocks literally, I believe it was one day off the highs, just off the highs right here. Perfect entry. The timing was great. We dropped, but I made it clear when T1 was hit, the first target, that personally I was closing out my position, my short position. I also mentioned taking a long position there because I expected a bounce, which we did get. And now, again, what I'm speaking to here is really define your trading style. I'm an active trader. I mentioned that longer term traders not be overly concerned. Um, if you're not interested in trying to game all these zigs and zags, and you want to catch the big trend, I think the next big trend on the semis, I still believe, is to the downside. Um, Whether we take out, well, we eked out a new high just recently, so we're barely underwater. I think it's less than 1%. Again, if you zoom into this chart, here's where we shorted that first red candle right after the highs. So we're not even, I don't even think 1%. Yeah, I show us about a 0.5% or so above the entry price on there underwater. So if you also covered some or all of your position here and you're looking to re-short, I don't right now. I don't have the confidence to say semis are short yet. If you're still in this trade short as a swing trader, I'm comfortable with this stop. I'll leave this stop as is for now. I don't think that stop gets taken out. I'm looking at a second divergent high. It's not confirmed. What I'm referring to here, this was divergent high number one. This is the divergent high that we shorted off of right here. We caught that initial rip. We've had a kickback rally, which has now taken us to new highs just by a small amount, but yet that's a new high. Therefore, we still have a second divergent high, which is really an extension of the first divergent. If you look, you can look at it this way. Here's the current divergence right now from this move off the low, as I draw it here. But that is, again, that's an extension of that previous divergence. So it puts in a more powerful divergent high. You can look at it both ways. I look at this as one large divergence, even though it's a series of two consecutive divergent highs. So if you want to know what I think happens, I'm expecting a little more upside in the market. So I think we can see a little more upside in stocks. Hopefully it remains below this suggested stop. As always, that's suggested. If you're a long-term trader, you want to give it a little room. That stop was, I don't know exactly where we entered, but roughly 6%. That might sound like a lot, but the target, the downside target on this trade is 24, almost 25%. And there may be more after that. So I wanted to let you know my near-term outlook remains slightly bullish. I'm looking for possibly a little more upside. Not enough that I think it's worth going long. I'll make that clear too. Just because I'm near-term bullish, I just don't think the risk reward is attractive. In other words, I don't try to pick up nickels in front of a steamroller. Maybe there's a couple, 4 or 5% upside in the semis, possibly more, but I could see that happening before another leg down, and quite possibly a leg down that takes out the previous first target, which is a pretty significant resistance zone. That's the line I had before, and it's even more significant now since we had that reaction when the first target was hit. So there it is. That's my short-term take. Slightly, bullish, but longer term, I think we reverse. Um, and again, if I see a point where I think it's objective to either re-add a short if you covered here, add short exposure, I'll let you know. But I don't see a long trade in the semis right now. I just don't think it's worth it. UGAZ, this is UGAZ, the three-time long natural gas EATN. This was, and I made a post recently. I've never, in all my years of trading, had such an extended period. I'm going back at least to the, middle of 2017, where I've seen so many trades, just barely clip the stops. These are the same stops I use, typically a 3-to-1 risk reward ratio or better. But then I also align that with technical levels. And never again in all my years of trading have I had that I can recall so many trades just barely hit the stops. If you look here, you can't even see it on this chart. Stop was on that official trade was 51.59, and I think we hit it by a penny or that one was taken out. Yeah, 51.58. So we took it out by a penny, and the trade went on to play out. Now, I made it clear at the time that I still very much like this. I like the natural gas trade. Was going to give my trade a little more room, and you can see how well the technicals have been working. Other than running stops, that's where I guess the program trades are sniffing out where well-placed stops should be, and they're running those. So I told you guys I was going to start to give a little bit more buffer on my stops right now, maybe slightly extend or lower that 3-to-1 risk-reward ratio, 2.5 to 1, somewhere around there on certain trades. So there was the first target was hit just now today, this morning. We're up 3%, and that second target was hit. So I did post an update in the trading room on this recently. Where we go from here, I still like it. I put an update in the trading room. You might want to check that out. I don't have this chart in front of me, but if you type in the search bar at the top UGAZ, you should get a chart on that. I showed you a seasonality pattern of natural gas prices rallying into year end like we did here. Uh, Okay, this is the daily chart. So this is when we were long because we caught that what I call year-end rally. Usually kicks off and usually around December rallies into the beginning, sometimes in January when the weather gets cold, and then that's always been followed by a sell-off. And then right on the day we bottomed here, I put that it looked like maybe the correction was over in that gas. And that was again on that seasonality chart. If you haven't seen it and you'd like a copy of that, just drop me a line. I'll be glad to send that to you. It goes back on using natural gas future for the past several years, 3, 4, 5 years or so. Oh, and to add to that point, what I mentioned to the inquiry I had in the trading room, there's also a trend line. I should have added that here. I posted on the chart in the trading room. Here's an uptrend line. So if you're long natural gas, here's an uptrend to watch. You can set a stop somewhat below that uptrend line and just let the position ride. This may morph into a multi-month swing trade. Um, but ultimately, I think somewhere when we get around here, this was a previous target on another trade. I wouldn't look to try to take out the old highs. I would just maybe eke another, I don't know, new gas. If we get up here, that's another 6, 7%. There's a big gap right there, 10%. And then it'd probably be prudent to book profits and move on to the next one. The charts just aren't clear. The indicators aren't telling me a whole lot right there. Z, no, sorry, XENE, Xenon Pharmaceuticals. Mentioned that in the trading room or in a video the other day, rounding bottom patterns. I don't have the rounded bottom drawn here, but also divergent low. That's what I have drawn out here, this bullish divergence. And here's an uptrend line to watch. So this one, again, the key level to watch, I posted it as a breakout over 327, and we were able to take that again as an unofficial trade. I think it was about a 30% gain right up here to the top of this basing pattern here and the rounded bottom pattern, if you will. So keep an eye on this one. As I said the other day, when we hit that level, that's where I took profits on my trade. I think it needs to work off these overbought conditions, consolidate a little, and then watch this one for a breakout, because if and when it breaks out that level, about what is that, 425, I'll give you that level in a second, there's a big thin zone to be filled. So I think there's a lot of potential on this one. Yeah, call it around 325, or really more importantly over the recent highs. I think those were 330 the other day. Oh no, I'm sorry, I'm in the fours. So we had a high of 445 the other day. So to be safe, you need to see 445 taken out. That's XENE. RKDA started to move yesterday, and no follow through today. We're back down below. Told you this one's whippy, prone to false sell signals. We didn't have a big volume expansion on the breakout yesterday. Um, and as I mentioned before on this one, I did cover it in a recent video, it's prone to whipsaw signals because it's a thinly traded stock. So it's broken out above this trend line several times, including yesterday. This one was impulsive, but we didn't close above it. This one was impulsive too. In other words, the only close we had above it was yesterday, but yet there wasn't the volume confirming. So this one's back below, but I still think it's ready to pop. And when it does, especially when 658 goes on a closing basis, these are your potential targets up here. So very low price, very aggressive, but a lot of potential. Another one that's low priced and aggressive is Tandem. I told you 343 had to get broken out. It had one whipsaw signal here, false breakout, fell back below, but this is a big basing pattern. And I did make mention in the trading room, I believe, and also in a video the other day, we broke out. And yesterday fell a little shy. I had that first target of 447. We hit a high of 429. So looks to be consolidating there. And I think but what I like about this now, we've been 1, 2, 3, 4 days above that 343, which defines the top of this spacing pattern. So that one looks good. I think it's consolidating, maybe a bull flag type pattern there if you really zoom down to the intraday charts. And I think that'll take us up here to about 542 soon. So again, low priced, aggressive stock. So if that one's not in your wheelhouse, avoid it. RDUS Radius, mentioned this one too. It needs a little work, but it seems to be so far holding this support zone that I mentioned the other day. It had a smackdown off this trend line and followed by a sell-off after earnings the other day, but it's holding within this support zone that I have here between these two lines. So just keep an eye on it. Our longer-term buy signal will come if and when this downtrend line is taken out on a convincing breakout. High volume, impulsive candle, especially a daily close. That could be a longer-term trade for us. AOBC, I've talked extensively about this one in the trading room. Really like it from a both a technical perspective, as I mentioned the other day. The technicals continue to firm up the longer term case. What I'm looking at here, this is a very powerful divergent low, bullish divergence, positive divergence, as we had back here. I should have had that mark for you. You can see positive divergence here. There's a divergent low. That led to a rally in the stock. I'm going to have to move that trend line. Making a mess of things here. Drag that trend line out of the way to give you a measuring tool. That was good for a 40% pop, 38% or so. We have a divergent low right here. In fact, I should move that line down. This stock they reported last Thursday, hit a low of 689. As of yesterday, and it's up even more today, the stock had rallied 55% off that low. Really like that. Put in a huge bullish engulfing candlestick here. Again, a lot of coverage on the trading room on this one. I loved what I didn't, I shouldn't say love, but I did really like what I heard on the conference call. I'll listen to the analysts' questions. I listen to the company talk about everything that's going on with this company. And I think it's dirt cheap. And I wouldn't be surprised if private equity, with all the cash sloshing around this market, there's a lot of companies looking to acquire other companies. AOBC's been under the gun for, in the public eye because they happen to manufacture, a small part of their product lines are those assault type rifles, AR-15s, those type of weapons. They call them modern sporting rifles. And again, I factored in, at least by my math and what they told me, even if they put a partial ban or some restrictions, that is not by any means a death blow to this company. So this company's cheap. And if a private equity firm were to take it out, then they're out of the public eye. When you're a publicly traded company, you have a lot of pressure from the boards, pressure from outside companies. So I think this one would just be a gem for some private equity company to scoop, and take off. And when they do that, the company is no longer publicly traded, but they buy you out. So if you own the stock, and again, that's speculation on my part. Whether or not that happens, I have no idea. But what I can tell you is here's a downtrend line that it's approaching. It's approaching that first target zone. So if you did take it in front of earnings, I mentioned it's an aggressive earnings play last week. Or you took it afterwards, keep in mind we are approaching the first target now, and it's up pretty sharply since then. So you might want to book profits there. I would expect a reaction. I'll just make it very clear when we get up here to a little bit more upside to this T1 zone, especially if we hit that trend line. Expect a pullback, might come all the way back here to that. That was our previous stop, I think, is suggested stop. And then ultimately go on to break out and hit any of these price targets, maybe even continue up there over time. It wouldn't be a straight shot. Not to get off topic, because this is not a trade idea at this time, MJ, if you're new to the site, for years I've at times covered the marijuana stocks, the cannabis stocks, going over. I have a watch list of 57 items, individual cannabis companies. This is the ETF, but I made very clear, after we were long and bullish these stocks, we put in this divergent high in MJ. A lot of the stocks also put in divergent highs. And I said at the time I was bearish, expecting a correction, and that I would not change my views anytime soon because I continue to receive follow-up comments. Now, I don't mind those comments if you want to bump me on my opinions, but I just wanted to say I think there's still some sideways grinding. I think probably the correction is most likely over, meaning this low here in MJ if you're trading MJ. But I could see these lows revisited. But more importantly, I just think it's going to continue to be a chop fest for a while. I think these things went up too much too fast. They were over-owned, overloved, and very overvalued. I'm still longer term bullish on the sector, but not. I don't have any desire to engage that sector at this point in time. So I just wanted to give that update because there has been a lot of interest in the cannabis stocks over the years, and a lot of coverage that I would do in the past. But the way I work on this site, I might watch this thing every day, and I do. I watch just about, you know, majority of things as much as I can watch on my watch list from time to time, week to week, month to month. I'll move back and start focusing on something else. But when I may be actively trading a sector, I may be talking about commodities day in, day out for weeks and months and trading those. All of a sudden, I step aside and I don't talk about them for months because I don't see a trading up. What I try to do is sidestep sideways grinds. I only want to trade when I see the potential for a trend, an uptrend or a downtrend, and I want to sidestep consolidation, noise, sloppy charts. So that's how I work. But again, every now and then, somebody will drip an idea. Hey, Randy, what do you think about XYZ, or what do you think about the blah 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 stocks? And I look at that, and I hadn't looked at it in a while, and boom, great, thank you for bringing that up. I hadn't caught that, and then all of a sudden I'll start really focusing in on that sector and put some official trade ideas. So I do value the chart requests that I get from you guys, and I always welcome any updates that you want on anything that I'm covering or not covering at the time. IEF. Treasury bonds. IEF, again, this was, I told you slow and steady. This is an official trade, 7 to 10 year Treasury bond ETF. And I said even if this one doesn't pan out right away, the nice thing about bond funds is you get paid to wait. Since bonds pay an interest, they pay out interest. So one thing I can see at this point, I wanted to make mention with what's going on, and this also meshes with my views for the broad markets. Here's what I think now we might see with IEF. It's still my first target, and I think that gets hit, at least that first target. I may close the trade if and when it gets there, but if my outlook for the broad market continues to pan out, which is a move to new highs, I think we can have another leg down in treasuries. Recently, we had some weakness in the stock market, so you saw a flight to safety. That was in part of why I went long treasury bonds, including TLT. But if we continue, if the stock market, let's just say in the next few weeks, moves higher, you'll see that flight to safety risk abate. In other words, they'll sell treasuries, yields will rise, bond prices will fall. So we may come back in, make another divergent low here before we move on, make a decent move higher. So I want to let you know this is a scenario that I'm leaning towards at this point in time. I'll leave that trade on as is. The stop is way down here. But again, you can place your own stops. If you're only targeting T1 or T2, you shouldn't use a stop below 100 that I suggested. You should have a tighter stop. TLT, similar story. That one popped up. I put it. It's an unofficial trade. I really liked it, but because we had IEF and they're very similar, I didn't make this an official trade. But you can see we already hit the first target pretty quickly and pulled back from there. And with most price targets on the trade ideas, that's where I expect a reaction to happen. Otherwise, I wouldn't list it as a target. So active traders can book profits, then recycle in. If and when we take that level out, it's certainly a support, an important resistance level that would open the door up for a move up to T2. But if my current scenario plays out in the broad markets, as well as what I'm leaning towards treasuries now, one more thrust down, and I'd actually like to see us undercut these previous lows. That's a pretty well-defined support level, as you can see. We have two previous lows back here, now three. Um, I like to see well-defined support levels get undercut because what that does, it flushes out the longs, brings in shorts, and that would mesh with my move to a new highs in the market because you would see the flight to safety bid. Again, you'd see that abate, meaning institutions would start selling treasuries as they go back into stocks, as they go to new highs, and then boom, if the market makes a marginal new high and corrects sharply, you could see that move up to my final target. So that's my preferred scenario. Whether it happens or not, we'll see. And again, if you're active trader and you want to try to game that, um, I can't tell you with the highest degree of confidence that's what's going to happen. I'm just going to leave this on as a swing trade now with the. Um, Actually, this is unofficial anyway, so those are the targets. We'll just leave it at that. Let's see. Next up would be I'll talk on XLE. This has been a little bit frustrating on this. This is an official trade idea, and XLE, that's a big component of the S&P 500, the energy stocks. We hit the first target, in I think less than a day, if I'm not mistaken, just a couple hours from putting this on. We had a divergent low, when I was bullish on the broad markets back here when they bottomed on the ninth. Obviously, I was bullish on just about everything else because XLE is a component of the S&P 500. So we got that initial pop. You were able to get out as a quick trader, and as so often the case, prices tend to consolidate around the first target level. We had a pullback, another tag of it. We sliced through it. And where it was frustrating is we fell just a few pennies shy. I thought this second target level was adjusted well enough below the actual resistance level, but it wasn't. We fell a few pennies shy, and that may be it. I don't know if we're going to get there again. We're still well above the stop. I'm going to leave it on. Either way, it's been a frustrating sideways grind. But for now, I don't see enough to close this trade out. Trade it as you like. This is still the official stop, 64.19. I forget we entered somewhere down here, and that is still the final target for now. I wish I could tell you more, but it's hard to. I can't squeeze water from a rock or blood from a stone. In other words, the charts aren't telling me a lot right now where the near-term direction is. Just telling me that we're caught up in a grind fest right now in XLE. So um, trade that one as you like. ENDP. I like ENDP. This is actually an official long trade idea on the site. This was another story of one that just almost hit our second target. We hit the first target right away for a nice gain way back when. I don't even can't even remember where. I think that it was over here. I think we went long down here. I'm trying to recall. We broke out, back tested this long-term downtrend line. It goes to the left of the chart here, and then we fell just shy of that second price target. I've given updates along the way. So far, it's looking good. I still like this one longer term. It needs to take out this level right here where we failed at the other day. And if we do, and I think we do, we head up to the second target. And at that point, I might consider, depending on my views on the market and in the healthcare stocks, I may close this trade out, make it the final trade if 912 is hit. As of now, stop remains at any move below 560, which would be a print of 559. So that's one we're just kind of caught up in that one longer than I wanted to be, but in the scheme of things, it's only been a few months, so it's not like we've been in that one forever. OMI. I like this one. Here's This is healthcare stock too, medical distribution. Big, powerful divergent low. I'm not sure if I shared this one in the trading room. You can see the divergence is confirmed. We had a divergent low right here, and the stock has been moving up since. I don't see anything in the way of this stock until 1807. So I wish I would have pointed this one out earlier, and I very well may have. It might be in the trading room. I know it's not an official trade. It's at 1714 now. I can see the first resistance at 1807. That's about another 5.5% move. Next target after that, 1973. But I would expect a reaction there if it gets to that first target level. Um, oh, wrong line here. Let's give you a line tool. So I think this one will look something like this. A little move up, a little kick back off there, 1973. And it may want to go on to backfill this gap before any meaningful reversal there. So there's one. It's a momentum trade. Again, I would have preferred to put it on as an official trade here. That's why I'm not adding it as an official trade now. It's sort of in no man's land between support and resistance, but I think it looks good to continue on up to that level. That's why I brought it up. PTX. I think I shared this one just recently. Earnings are on March 8th. Keep that in mind. So this one will report tomorrow. 315 is the level it needs to take out. It's eked above that, but that doesn't matter again because once it reports, everything can and will change. So my guess is after it reports tomorrow, it reports after the market close. So therefore, on Friday, I would put a very good odds that this stock is either going to gap up or gap down. Based on the chart pattern, this bullish divergence, this basing pattern that we've had here for a while right here, I'm expecting a gap up, and I would not be surprised to see this stock hit that. I've personally taken a position in advance of earnings because I like the chart, a small position, which I'll add to unless we happen to gap all the way up here and don't get, an objective entry. And if it drops down, I don't want to see it print a solid daily close, a little below 230. You can see some pierces below there, but that would be the low end of the range, and that would be very bearish if it broke that. But again, I favor upside. So a speculative trade, but keep it on your radar. And then Friday, check in, and maybe it breaks out and comes in and back tests this 315 level, and then we can get an objective long entry there for an official trade. So just wanted to give it to you guys. Haven't posted a lot of shorts lately. As you guys know, I love shorting, and we had more shorts than we had longs come earlier this year. But this one stands out. Macy's looks like a nice divergent high, yet to be confirmed, but I can see the PPO rolling over. You guys know I love to see these divergent highs and lows on the daily time frame. I expect this stock, and it's also at resistance. Here's the thing. We have a lot of reactions at this level here, and so here's a stock overbought at resistance with negative divergence. This is my type of trade, so I may consider this one as an official short trade soon. Minimum target, well, that's not accurate because I have a line at 27, but I also have a line up here at 27.72-ish. So we'll call it about 27.70 would be my minimum pullback target. That would be a drop if it gets there of about 8.5%. And there certainly could be more with that divergence there on the daily time frame. We might come all the way back down here. So as much as maybe an 18% or more drop on Macy's. Um, so keep an eye out for that one. That might be an official trade soon. Finally, I think this is the last one I wanted to cover. OREX, Orexogen Therapeutics. Healthcare sector, drug manufacturers, specialty and generics. I must have covered this one in the past. I believe I have. If not, we had a false breakout here. Actually, not a false breakout. I pointed this one out, I think, in the trading room. This was a target I had, 158. We hit that target in one day. We broke out, hit the target, pulled back, have since consolidated and broken out again. It's not a very impulsive breakout, so I'm a little skeptical, but we've traded now above that trend line, which is also in a descending price channel now for 1, 2, 3 days. So I think this one has a good shot of making another thrust up to 158, low priced, which means high risk, but that's about a 21% gain if we get there. So here's a trading op because of its extremely aggressive nature. I'm not adding this as an official trade idea now, although I might. This is a weekly chart. You can see my note I had on the daily. It said see weekly chart. That reminded me to check the weekly chart on this one. Big, powerful, bullish falling wedge, confirmed with positive divergence, just starting to crack. And see, here's the thing. If we close at or above the current levels right now, we're at 131. If we close there on Friday, this will be the first weekly close above this downtrend line since it began all the way back in April of 2015. And I can just tell you, eyeballing this chart, that pattern would project my target, my longer term swing target would be 584. So, yes, very aggressive, low priced. Anything could happen. This company can just go away one day. Risk and reward go hand in hand. That's about the one certainty I'll give you in trading is there's no shortcut. There's no easy solution. The higher the risk on a trade, the higher the reward potential, and vice versa. So there's about a 360% return if it gets there over time. So I may add this one as an official trade again. Let's see how it closes this week here, and I'd like to see volume start to come to it as well, not just a weekly close. I'm not seeing a lot of volume. This has been not a very convincing breakout so far. I'll need to also check earnings on that one to make sure that they're not scheduled to report. All right, another super long video. Apologize for the length of these videos, but remember, you can just click on the little icon on the YouTube's screen on the bottom right, increase playback speed to either 1.25 or 1.5% if you're really can keep up with that, and cut down the time on these videos. But again, I had a lot of trade ideas because of the uncertainty in the market and some of the factors I mentioned these trades. A lot of these are unofficial for this point at this point in time, but I will look to add some official trades soon. Normally we have more official trades, both long and shorts, on the site than we do right now. But again, that's a reflection of my lack of conviction for the near-term direction of the market, if that makes any sense to you. So when I see a good opportunity setting up, when I see a big move in the market, whether it's a correction or a rally, that's when I start stacking up the official trade ideas. All right, this has been Randy Finney with the Right Side of the Chart. Hope you enjoyed it.